I'm pleased to be able to speak today with Mark Zawashi, the founder of 650 Labs. Thanks for joining me here today. Mark, you advise a whole range of traditional corporations in terms of how they think about innovation and what they need to be investing in to make that transformation to the new economy. Give us a sense of who you're talking to, the questions they ask you, and what are traditional corporates doing in the change that they have to make today?
Thanks, Edie. First of all, it's great to be here in Singapore today and have this dialogue with you. There's about 5,000 companies in the world with $1 billion or more in revenue, traditional multinationals, and they're all understanding they need to make a shift from this old industrial world to this new digital world. Every industry is being digitized at an ever-increasing rate. They all open innovation labs, they all get advice from consultants, but the reality is very few are growing, very few are getting the results of their investment. And I think where they struggle is what we describe as the what versus the how. Look at the banking sector, where we're very active, financial services. They all know they need to work on blockchain, they need to work on big data and analytics. They've heard this thing called design thinking is important, and they're buzzword compliant, and they have all of the themes to work on. But guess what? Every bank around the world is working on those exact same things. They all go buy furniture from the same vendor as Google, and they all build these very expensive labs, and they want to show their board and management they're working on the right things. And our view is they need to, more importantly, work on the how. The what's commoditized, the blockchain, the big data, all that stuff for every sector is commoditized. The how is they need to realize that in order to be digital, it's a very different skill set. How you lead is different. How you motivate employees is different. Where you find talent. All of those softer things are actually what's more important. And let me leave you with this idea. 4 of the world's 10 most valuable companies are now in Northern California, the so-called Silicon Valley. And they don't have any particular domain in technology. I mean, they're not doing technology any different. What's different about these companies is their organization. What we may know about 21st century management in the digital world, I do believe we're learning from the Googles and the Facebooks and the Apples and the Ubers and the Airbnbs and the Teslas of the world. They have created, not once, but systemically, they're creating big global companies that have huge impact. And I think traditional companies can learn a lot from them. So instead of going to Silicon Valley and looking for technology, go there and look at the organization and how they're managing, because that's the real secret.
Well, these are organizations that start from scratch.
Of course. They have an advantage, yes.
And from scratch means that they start with an original proposition. What is common in terms of the original proposition of a Tesla, Airbnb, and so on? I mean, some are engineering, some are services, and what is it that they are able to do with a traditional company? If you take an Airbnb and you compare that to IHT or Starwood, one comes with an asset base, which the information on that asset and availability can be made a lot more democratic, and the other does not have assets and have all the democracy in terms of what's available out there.
There's many differences, but let me give you 3. First of all, they're not first. The kinds of companies that are making a huge impact in a market aren't the first one with the idea. They're often very late to the party. Facebook was not the first social media company before we had MySpace. Google wasn't the first search company. There was a dozen companies on the market, as you know, before Google. Apple certainly wasn't the first handset company. We had Motorola, Nokia, and RIM. In fact, Nokia had 24% market share globally when Apple came onto the market. And guess what? That's now basically 0. So number one, these companies aren't first to market, but they're laggards. They're actually late, and they see an existing idea and they make it better, number one. Number two, these companies are very good at challenging conventional assumptions. When you look at a major multinational, they have hundreds of assumptions that run their core business. They have assumptions on what markets they serve, how they build products, how they ship products, who they partner with, who they compete with, how they price products, hundreds of assumptions. And when you look at the so-called disruptors, they challenge the very assumptions that run a sector. Airbnb proved to us you don't need to own hotels to be in the hospitality business. And Uber proved to us you don't need to own taxis to be in the taxi business. So they're very good at disassembling or disaggregating assumptions that run a sector and then recreating something from new. And then third, these companies are world-class at mathematics and computer science and physics and chaos theory and operations research and behavioral sciences, and they hoover up talent from around the world, because when you think of digital is just math and software. So the traditional companies that get better at traditional math and software are going to succeed.
How much of innovation is about creating revenue streams that did not exist, and how much of innovation is about productivity gains that a traditional corporate that can benefit from and add to its bottom line that makes a difference? Profitability, productivity gains, things that the incremental changes that corporates look for.
In some ways, you may have answered your question. The real benefit of innovation, I believe, is the more transformative type in the former. It's finding new revenue streams. It's building new business models that previously weren't in existence. The productivity gains I view as incremental, as smaller scale. There's a famous McKinsey framework that talks about Horizon 1, Horizon 2, and Horizon 3. 3 being very transformative, out in the future, and 1 being, kind of smaller scale, incremental process improvement, productivity gains. Whilst the Horizon 1 stuff is important, it can easily be replicated by your competitors. It becomes, very much a zero-sum game. I think another area where large incumbents struggle is they build large businesses. They have shareholders. They operationalize those businesses. They put KPIs to 4 or 5 decimal points around everything that moves, and they build stability and reliability and predictability and risk aversion. They need to build those things because they have shareholders that expect quarterly results, and they don't want variability in those financial outcomes. But that very stability, predictability, reliability, risk aversion, that's the antithesis of innovation. Innovation oftentimes is uncertainty, and so they get pushed back to doing the Horizon 1 incremental productivity improvement stuff, not the transformative stuff that they do need to work on.
Of the companies that you work with, give us a sense of the ones that you had helped to make some breakthrough within the organization, whether it's a new revenue stream or a different way of working, to take them from an industrial age to the digital age.
Like a lot of other professional services firms, we don't publicly name our clients vis-a-vis the work we do with them. We have lots and lots of logos we can share from all over the world, but we mask the actual naming the client against the results we've achieved. I will say that it's extraordinarily difficult for large organizations to change. The inertia is stability, as I said earlier. The executive team is getting paid on this year's performance. Those organizations that do well with truly transformational change are the ones that have a management team young enough in their career, early enough in their career, that they know they need to make a change because they will live with the results of their impact. So teams that have a new chief exec who may be in his or her early 40s, they know they're going to be around for a decade. These are the kind of companies that have a greater chance of changing. When I see a company where the executive team has been in their roles for a decade, they're in their late 50s, that chief exec may be departing the business in a couple of years. It's been my experience that those organizations find it a lot harder to change because the CEO sets the tone wants the business to be stable and hand it off to his successor, and they aren't typically one that embraces the need for transformational change.
At the same time, how's the work that you do different from the work that other players in Silicon Valley do? Plug and Play, for example, takes a position in the companies that locate in their premises and so on. At the same time, they provide that ecosystem by which traditional companies can experiment and try out different models that are out there. How do you provide a similar setting or opportunity for the traditional players in your?
Sure. Plug and Play is one of about 75 accelerators and incubators in the Silicon Valley region. If you really look closely at Plug and Play, and I know them well, and we partnered on projects together, Plug and Play is really a venture capital firm. What Plug and Play uniquely does is create a marketplace between startups and corporates. It charges startups to co-work in their facility, and it charges corporates to speed date with the startups. And when enough corporates run to a certain startup, Plug and Play funds that startup. They're letting the corporates guide them to the most interesting companies in their portfolio. It's effectively a novel venture play. They're investing in the best startups. That really is their business model. I'm not a venture capitalist. I'm not making investments in startups in this systemic way. I know the team very well. They partner with us. They've brought us into many of their corporate clients. But when you look at their business model, it's fundamentally a venture capital firm. The other incubators, I think, are largely, and accelerators, are largely working with startups, trying to get equity in them, and they have these programs where the corporates get to kind of watch or play along. Rocket Space is famous for this, for instance. But I'm not, my model is fee for service. I provide counsel, objective counsel, and advice on what we're seeing globally. But most of those models are trying to extract equity from startups. That's not our business model.
And what do you see in terms of innovation around the world? What do you like in terms of what you see in Africa, in Asia, and what do you think we need to put our finger on and watch more closely?
Look, I think from a technological perspective, the two big trends that certainly the audience has heard about, blockchain and AI, and maybe a third would be the aspects of augmented reality and virtual reality. But blockchain is extraordinarily transformative. If the internet is an exchange of information, blockchain is an exchange of value. And many people believe that blockchain is bigger than the internet itself. So not just financial services, but if you think of this as an exchange of value, it affects identity and trust and property records. So it's not just about banks and currency, and it's not the cryptocurrency stuff. It's truly a system of record of the exchange of value done in a way without middlemen. Yeah. So it's going to affect every business.
But every bank that gets into that business tries to recreate the middleman function. So
correct, the wrong approach. Right, we need new models. But blockchain is extraordinarily interesting in that regard. AI is equally powerful, and I think AI is not a new word. It's actually been around, I think, in the English lexicon for about 75 years. It certainly goes back to the 1950s. Check it out. But the thing about AI is there's this notion of the technological singularity. It's a point in time in the future where, quote, the computers take over. And can we teach the computers to reason? And can we teach the computers empathy? And tremendous progress has been made in the last 5 years in this area. So much so that a lot of the leading companies and thinkers in AI appear to be putting their intellectual property in the public domain. They don't want the moral implications of controlling AI. I think we're in uncharted territory. I think the possibility of AI is breathtakingly interesting and positive on the one hand, but I think it has extraordinarily large moral implications for society. And this hasn't quite been thought through, but I think when you look at what Facebook and what Tesla and others have done with their AI IP, they seem to be putting in Google, they seem to be putting in the public domain saying, I don't want responsibility for this. This is my take on it.
Thank you, Mark, for your points, and this is a continuing conversation.
Thank you.